Hi, I am Anna. I come from www.ntvforex.com. Cautious start to the week as the nascent dollar rebound remains on track. Video analysis http ntvforex.com News ID 1224ED 8/10/2020 12:18:44 p.m. Market overview. The dollar rally that threatened on Friday in the wake of the payrolls report tentatively remains on track this morning. The positive surprise in Fridayâ's labor market data triggered a near-term rebound in the dollar, but can it continue? Markets are responding slightly to the continued lack of consensus in Congress over the composition of the next U.S. fiscal stimulus package, but have so far not lost the rebound impetus. President Trump has gone ahead with an executive order to enable a less generous $400 per week of unemployment benefits, in addition to other relief on evictions and student loans. However, markets seem to focusing more on the lack of traction on the whole package of support. We are seeing cautious moves across forex majors, whilst consolidation on commodities, mostly precious metals, also featured. The key question that traders will be asking will be whether the hugely stretched dollar sell-off that threatened a reversal last Friday will be able to find traction. This would have a real impact on the near-term outlook for gold especially. Wall Street closed mildly higher on Friday with the S&P 500 0.1% at 3,351. Whilst U.S. futures are a shade higher today, with the E-mini S&P 0.2%. Asian markets were cautious, with the public holiday in Japan, but China's Shanghai Composite was positive at 0.7%. It is interesting to see European indices looking positive early today, with gains on FTSE 100 0.6% and DAX 0.2%. In commodities, there is consolidation on gold 0.2% and silver 0.4%. Oil has bounced by around 0.5% after Fridayâ's slide. It is a relatively quiet start to the week on the economic calendar. With little to change the narrative in the European morning, the JOLTS jobs openings at 1500 BST are the only real data of note. Consensus is expecting to slip slightly to 5.30 m in June after being at 5.40 m in May. NBSP chart of the day. AUR/JPY Euro outperformance through the major pairs has been impressive, but is it about to have a little corrective phase? The chart of Euro-Yen has been trending decisively higher since May and accelerated in a shorter uptrend during late July. However, after Fridayâ's negative candle, this uptrend is coming under threat. The three candlestick setup is quite similar to an evening star reversal, although not as well defined as the one in early June. A strong bull candle into the pattern on Wednesday, followed by an almost dodgy candle denoting uncertainty on Thursday, and Fridayâ's bear candle to complete what is arguably a topping formation. It also comes with the daily RSI crossing back below 70, whilst MACD lines are also threatening to a bear crosser. It suggests that today's session could be important in the near-term outlook. After posting a mini reversal setup, another negative candle that breaks the 4-week uptrend could open for a corrective phase near term. The market is threatening lower early today. We would look towards a retracement, perhaps back towards the support around 123.00, which is also around where the support of a 3-month uptrend comes in. Initial resistance is at 125.10, with the 125.60 high increasingly important now. The hourly chart shows the rally beginning to falter, with support at 124.00–124.25. NBSP Brent crude oil. After promising to drive a breakout into the high $40s last week, oil meekly limped into the close on Friday with a rather disappointing slip back. How the bulls respond in the support band $42.90–$44.90 will now be key. Holding this band of support would be seen as another development in the broad recovery and a buying opportunity to play for the continued run of higher lows. There is a feeling that this is constantly a bull run with the handbrake still on, with 2 steps forward and 1 step back. However, it means that once support forms, as long as $41.30 key higher low is intact, this will be the next opportunity to buy. An early tick higher this morning is encouraging for the bulls and is leaving Fridayâ's low as an initial support around $44.25. There is still the need to close the gap at $45.20, but given the positive medium-term configuration on momentum indicators, this should still be seen in due course. Last week's high of $46.25 is initial resistance for the bulls to target. NBSP Dow Jones Industrial Average. The rally on the Dow keeps rolling on. Another positive candlestick and a close towards the high of the session. Friday saw a slightly less decisive strength, but still another session where weakness was bought into. The market continues to eye the key June high of 27,580. Despite all the positives, there is still a slight tailing off on momentum indicators. However, RSI and stochastics remain strong. There is little reason currently for any serious corrective momentum, whilst there is good near-term breakout support at 27,070. Any slide back into 26,610-27,070 would be seen as another opportunity to buy. Key support remains with the higher low around 26,000. Beyond 27,580 the resistance comes in at 28,400 and the key February bear gap at 28,850. NBSP. Read more analysis here. EUR USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.